When introducing purpose, I discussed the need to talk about purpose at the granular level, not the purpose of property management, but the purpose of facilities management or financial management. Today, we're going to talk about purposeful financial management. What would happen societally without effective cash management? Why is property accounting so important? We'll define purposeful financial management. It's maximizing landlord profit, incentivizing future investment in our community. The key words here are maximize, profit, future investment, and community. The quick synopsis being that landlord profits are not only necessary, but good, and that when landlords win, our communities also win in the long run. Let's break this down. Profits are purposeful. First, one of the hardest things for some people, especially those raised around modern North American culture, is understanding that profits can be purposeful. As commercial property managers and property accountants, one of your key agendas is to optimize landlord profit. And if you think this is bad or void of purpose, you're not only wrong, but you're in for a stale career. Wouldn't that suck if you think the main thing you're optimizing for is completely void of purpose? Not a fun career. Profit has been wrongly villainized. People exchange their money for things they want and need. Through this lens, money is akin to a token of appreciation to a receiving business, a signal that their offer is valued. Likewise, the more a company is valued by the community, the more revenue it tends to generate. Naturally, the higher the gross revenue of a tenant, the higher rents they would be willing to pay. It is through this lens that we see properties with higher returns for their landlords are inherently more appreciated by their surrounding community. Because at the end of the day, if the people in the surrounding area don't appreciate the businesses that are there, they won't come with their little tickets of appreciation and give them money. To understand this more deeply, you need to, for a moment, put on your biologist hat. Hating corporations is similar to hating wolves. They can be easy to hate, as naturally they live higher in the food chain. And after all, we grew up on tales where the big bad wolf is trying to eat the three little pigs or Little Red Riding Hood. But a biologist knows a wolf is a critical link in an ever-connected food chain. Many have heard of the story at Yellowstone National Park, where the villainized wolf was reintroduced into the ecosystem, where their positive impact surprised everyone. In a quick summary, the wolves kept the once overpopulated elk in check. With less elk, fruit-bearing plants and trees came back into balance. Bird populations increased due to an increase in berries. Elk avoided valleys and riverbanks where wolves could corner them. This allowed willows and aspens and various grass to recover, and trees stabilized riverbanks. Rivers narrowed and deepened. Beaver populations returned, songbirds came back, the whole ecosystem transformed. Scientists call this a trophic cascade, where change is so sweeping that it alters the physical landscape in the area. All of this happened because of wolves. Now realize your biologist hat, which you still have on, is very helpful for understanding macroeconomics, and that the role of landlords in our society is as critical and as purposeful as wolves in Yellowstone. Landlords hierarchically are an easy target for people to hate, but realize this disdain is more of a reflection of our ego or insecurities, and that they too have their place in our ecosystem, no different than wolves. What happens when? To completely understand this, as noted when we spoke about purposeful facilities management, we need to ask the question of what happens when. The question, what happens when X doesn't get done, is a great filter for understanding how any task is a purposeful rung in a ladder, or in a long line in a bunch of rungs. What happens when a landlord doesn't make profit? Well, some foreclose, banks take over, and landlords stop developing buildings. They stop investing in our community. And so what happens when that happens? Well, we begin to have less places to buy the things we need or receive critical services. We have a lack of industrial space, which constrains manufacturing distribution. What happens when that happens? Well, rental rates spike as vacancy drops due to a lack of supply. And the things we buy and the services we receive all get more expensive. The profit of landlords is a critical requirement for there to be investment in our communities. So if nothing else, protecting this profit is the key role of property accountants and property management professionals, as they ultimately manage the property's finances. Why you matter? You matter because you contribute to one of the three ways management companies execute purposeful financial management. One, it's protect income. This is as simple as maximizing the collection of rent, but includes more nuanced things like managing triple net recoveries effectively. In short, it's minimizing slippage. It's a good accounting term for you. Two, increase revenue. Many managers believe their job is to manage what already exists, but great managers are always looking for ways to improve financial performance. Three, control expenses. This is quite simply additional rent control. Property taxes being effectively contested. Are we wasting money with certain trades? What is the additional rent of this property versus this property? Sure, tenants pay the triple net expenses for a building, but the higher the additional rent of a property, the less leverage we have to negotiate market-based rents upon renewal or when there's a vacancy. And so that was three things. One is properly collecting what was negotiated. Two is looking for ways to improve what was negotiated. And the third, people think of it more simply as reducing expenses, but it's really actually minimizing the pressure on future negotiations. And so when we do all three of these things, we are protecting the bottom line. And so the heart and soul of this lives in the financial statements, where property accountants operate on the front lines, keeping things in order to be able to execute on these three areas. Every single page, the balance sheet, income statement, AR report, ledgers, etc., culminate to protecting cash flow and ladder up. That keeps properties profitable and ensures our local business communities continue to thrive.